Hello and welcome to the review. I'm Andrew Riddle. The top story this past week, earnings. With over 180 companies reporting the last week out of the S&P 500, 73% beat their top and bottom line estimates. A tremendous quarter for earnings. Some of the big winners were Facebook, Boeing, and McDonald's. We even had some unexpected winners like General Motors, Ford, and Coca-Cola. Despite that, the S&P and the NASDAQ did slip a little bit last week. The blue chips, however, soared, with the Dow up over 1%. And then there was Amazon. Amazon, being Amazon, missed estimates and not just a little. They reported earnings of 40 cents per share, while estimates expected them to be over 3 times that. Now, before you think Amazon didn't make any money, Amazon's top-line revenue grew 25% in the second quarter, $7.4 billion. That's a remarkable increase for a company the size of Amazon. So where did all of Amazon's money go? The same place it always goes with Amazon. They dumped it right back into the company to develop new products and new services. Jeff Bezos' strategy has always been to take over the world and make money later. And I guess it's working for him, because at least for a day last week, he was the richest man in the world. Amazon quietly rolled out last week something called The Fix, which is available only for Prime members now, but a place where you can buy handbags and other accessories that are white labeled by Amazon. They made public that they're going to roll out something called Prime Wardrobe, a service where you can get a box of clothes and you keep what you want and return the rest, like Stitch Fix and some other companies like that. We learned last week that they're working on some top secret project to take over the world of medical records. And of course, we know they bought Whole Foods earlier this year, and we expect that deal to close later this year, which will give them a huge real estate footprint in every major city in America. What exactly they'll do with that, it'll be fun to see. But Amazon remains the growth story in the stock market. This earnings thing didn't really change anything for us. Their top line earnings are great, and they continue to invest in the company like no other retailer can to keep themselves growing. We learned about GDP last week. GDP's up 2.6% annualized. That's a great number. It beat all expectations. And consumer confidence was read again last week at 121 versus estimates of 116. That 121 number is about the highest it's been in the last 16 years. Of course, when we get pullbacks, they do tend to happen when consumer confidence is sky high. And right now, it is definitely sky high. As for this week, it'll be a little bit quieter than last week because so many companies reported. But hey, any week where Apple reports earnings is an exciting week, and that's this week. So check back with us next week to find out how Apple did and what else has gone on in the markets. Thanks, and we'll see you next time.